Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, April the 30th. I'm Eric Wilkinson, and some of you may recognize me as the Wolfman from mainstream media, where I talk about the economic data and the geopolitical environments, how those come in to impact the markets with some of my market analysis. I'm going to do the same thing in these daily market commentaries, but I'm also going to talk about the option strategies I implement into my portfolio based on the assumptions I come up with in my market analysis. And for you folks, we've streamlined the process for you to find the best strategy for any given assumption. We look at the pricing, and that determines the overall strategy. It's not always buying a call for a bullish position. So please check those out at Pro Trader Strategies. I really dig into the devil of the details there. Here I will talk about the option strategies, how I'm implementing them, but I'm not going to really dig down on the nitty gritty. I just don't have the time to do that for you folks. I'm sorry. That's why we do those webinars. All right, so let's get on with the economic data. Across the pond, really not a whole lot of major economic data other than Germany preliminary GDP coming in at negative 1.7%, expected to be right at around 1.5%, so pretty much in line with expectations. They did revise last month's number up 0.2%, so kind of makes up for that headline number there, and it wasn't really a major miss anyway. And then European Consumer Price Index in line with expectations, core CPI in line with expectations as well. Now moving over here to the United States, we got our personal consumption expenditures. That came in at 0.4%, expected to be 0.3%. That's good. That shows that people are spending, and that is core personal consumption expenditures there. And then we also got personal income better than expected at 21.1, expected to be 20.1, so a full percentage point better there, and a revision last month's number, but it was only 0.1% higher. Personal spending came down a little bit, 4.2%, expected to be 4.3%. So personal income is increasing. That shows that people are getting jobs. There's wage inflation there, but they're not really spending yet, and it's still because probably we haven't really fully reopened, but rest assured, I believe that with even seeing this income go higher, that personal spending is being pent up, all right? And that is part of this whole roaring 20s ideal that, or thesis that I have going on with coming out of this pandemic. People are going to be a little bit careless maybe with their money. All right. Chicago PMI coming in at 72.1. That's the highest number we've seen since like 1980-ish, somewhere in the 80s, middle 80s, I believe. It was supposed to be 65.4, just knocking it out of the park. Now, this is those PMI numbers that we've been getting like mixed signals out of. Great to see Chicago really knocking it out of the park there. University of Michigan consumer sentiment coming in higher than expected at 88.3 as well. Inflation expectations coming off. It was 3.7. Now, we would expect to see this inflation start to ramp up a little bit, but it came off just, albeit slightly, to 3.4%. All right, let's talk about the overall market. We've got crude oil coming off just a little bit here, $1.63 in change. Now making a pullback here, engulfing yesterday's rally there. So a little bit of bearish tones here, still above that 50-day simple moving average, so long-term bullish still, but showing some weakness just a little bit today. We're going to look at bonds. They are moving just slightly higher. Bitcoin making a big move to the upside, up $4,000 on the day, while we see gold futures pretty much unchanged here. And ripping through these folks. Why? Because I want to get to my earnings trades here. We'll talk about that a little bit. We've got the VIX moving higher. NASDAQ equities moving a little bit lower today, off of the lows, though, that we saw earlier this morning. Dow Jones Industrial Average down 200 points. Really not major moves here, but all of the equities in negative territory. As you can see, NASDAQ doing the best, trying to make a move to the upside right now. Probably due to like Amazon having better than expected earnings is holding that market up a little bit there. They blasted to the upside here. As you can see, mini S&Ps, just weakness for the most part throughout the overnight. No real attempt to flush those guys out. That is showing some real weakness there, as when we see some overnight inventory being bearish and the daytime session doesn't try to flush those guys out. That's usually pretty significant. All right. All right, Amazon, moving to the upside. Let's talk about the earning trades. I played this to the upside using the puts. Now, usually I go into the weeklies for these, all right? Well, I couldn't get really great strike location. I wanted to get right around this 3,100 handle for Amazon. That would be a place where I'd be willing to pick it up. It also has a couple of other areas. We had the 50-day simple moving average. We have the point of control where it could kind of slow down. So I wanted to get down here around that 31. So I decided to go out into the monthlies and went into the May and sold the 3,100 puts in there. So I sold them for $11.45. Bought them, or I'm working in order to get them back for $4.50 or something like that. It's off of the market right now. I'm working a bid for $4.50. It's trading right around $5.25. Why haven't I gotten out of this? Well, because Twitter just can't get out of its own way, folks. They are missing Trump like there's no tomorrow, I'm sure. They are seeing very few newer subscribers here, and the Twitter frenzy could be coming to an end, I guess, as they are struggling to get eyeballs. We saw Facebook, we're seeing TikTok, all of these other platforms, Facebook doing very well because of Instagram, and all of these other platforms doing very well. Twitter really struggling to get those subscribers in there. Well, I thought that they were going to do pretty good, obviously, because I sold the April weekly, sold the 59 puts in there, and I originally sold those for 80 cents. I'm not out of those right now, folks. The last I saw on this trade for Twitter, it's trading right around $2 or something like that. I'm trying to get out. I have a working order to get out for $1.80, but I'm well away. So I'm trying to play this whole Amazon Twitter trade to break out for a scratch. I did the Amazon, obviously, a little bit, smaller quantity than I did with the Twitter. But right now, they are both basically at a scratch for both of these trades. I probably should just pull the ripcord right now on it. I probably do this after the close. But Amazon is a winner. The Twitter is a loser. But I'm kind of at a scratch on both of those trades. If I was able to cover them right now, actually, I'd be up a little bit of money. Probably $1. All right, so that's about it. That's all I got for you folks. Have a great weekend. Take a moment to go over the disclaimer and smash that like button if you had anything that you were able to take away from this. Anyway, that's all I got. Questions, comments, anything else, throw it down there in the bottom. Let me know what you guys are looking at. I'd love to have some conversation with you. So if you can't take that, take it easy.